Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, here we are, Phil. We're actually pretty much at the end of April and not quite sure how that happened.
No, I know. We were just chatting before we started to record, and we're trying to work out, because there's a couple of things coming up in May that we'll talk about in a minute. But you said it's next week. Well, what? Yeah, it is, isn't it? You can't believe it's sort of 1st of May already next week. So yeah, it's as always, it's flying by. A lot's happening, but at least we're getting a little bit of sun. But I think you still need your hat and scarf on, though, to be fair.
Oh, definitely. Even down here in the south, it is very cold. And I was watching the weather forecast last night, and apparently April is the dullest April on records.
You poor southerners, you must be cold for you down there.
Yes.
Weather.
Yeah. We need some sunshine.
You need some sunshine. You need some hot weather or a holiday. That's what you need. But I'm sure we'll get there. So we've got our usual interview coming up with Derren Martin. So we'll play a clip this morning in the podcast. But yesterday you will find the full interview with Derren Martin in your podcast feed. So as you know, Derren is the director of valuations at Cap HPI, and he'll be running through some of the April trade performance figures of being what's happening in the market, and particularly around EVs and new entrants into the sector as well.
Yeah, now the full interview is actually on your podcast feed. That went live on Friday. And in fact, at the beginning of the week, it's been a busy week for us. We published the supplier special with Martin Beckers, who's the founder of AutoChat. So that's also in your podcast feed. And I mean, it's a fascinating insight into the world of AI and showrooms, dealerships, and how AI is being used, certainly by some of the big European groups and now some of the UK groups, to just automate some of those customer functions.
Yeah, and create that efficiency into it. That's the key with it. Continuity, efficiency, and consistency is obviously what Martin was talking about. And we must wish Martin all the best, because he has been nominated at the forthcoming AM Awards next week as a new supplier, which is a great accolade to get. Just in the short time that he's been over in the UK, to be nominated for that. But we've got those awards coming up next week, haven't we?
Yeah, they're on Thursdays. So good luck to anyone listening who's been shortlisted and will be at the event on Thursday night. We'll do a roundup next week of some of the winners, but we wish you well. And also on the same day is the Driving Digital Conference that's organised by the NFDA and our friends Judge Service, and they've got a great lineup of speakers, and I know there's a handful of spaces left for that. So that's in the morning of the AM Awards. So if you are planning to be in London all day, then do check out tickets for that, because they've got some great speakers, including Graham Potts from Eden Motor Group, and our good friend Dale Wyatt from Suzuki GB, and of course Neil Adley from Judge Service.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from the Financial Times, AM, Car Dealer, and the Daily Telegraph. Starting with Pendragon's new owner, Lithia, to close 16 CarStores with staff notified about potential redundancies, while the sale of Pendragon's retail business boosts profits for newly listed Pinewood. We also look at how a perfect storm drove up car repair costs in 2023 by a whopping 13.5%. The UK's car parc nears 36 million units in 2023, providing dealers with an after-sales opportunity by targeting older cars. But car production tumbled by more than a quarter year on year in March, as factories prepare for new generation EV models. We have a warning from Stellantis about the future of bringing cars to the UK because of the ZEV mandate. And finally, we reveal the peak day for customer inquiries. So do stay tuned for that. But before we look at all those stories, here's an extract from our interview with CAP HPI's Derren Martin, looking at how April's trade values performed.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Do you want to talk us through, the sort of the main headlines at that 3-year 60 point, and which obviously is pretty much the in line with seasonal normality, as you say there. Do you want to talk us through some of the details and what's been happening in the month of April and the sort of first part of the year?
Yeah, so the first quarter there was a 0.5% increase over those 3 months. So we had one month where values went up by 0.7. I think it was during February. So it was a strong start. We've now seen values drop during April. In our Cap Live product, dropped by 1.5% on average, which is equivalent to about £300. So it's I guess a sort of a slight softening in demand has caused that, along with increased supply from what we saw from new plate activity in March. And that tends to happen, especially in sort of normal pre-COVID times. You get a lot of activity around the plate change. And then as Easter hits, you've got people going on holiday. You haven't got so many inquiries into that retail world, so it slows down a little bit, and that's what we've seen this time around. But that drop of 1.5% is broadly in line with what we've seen in the last. We always sort of go back to the start of Cap Live, which was so we've had 12 years of Cap Live now, and the average is a 1.2 drop over that period. If you then exclude 2020, where we were in a COVID lockdown, and then 2021, when values went crazy, going upwards, the average decline in April is minus 1.6. So we're really close to being sort of in line with that. And obviously we'll talk about fuel types, but if you look at petrol cars in isolation, they've only dropped by 1%. So that area remains quite strong. But I would say from a dealer point of view, they are. It's probably been a little bit disappointed with how things have been post Easter, maybe a little bit behind where they budgeted for, but overall we think it's fairly normal for that time of year for what's happened.
I mean, you mentioned Easter there, and it came early this year, and I think on one of our last podcasts, it's probably not the best of timing coming at the end of the March month and the end of the first quarter, and how much did that influence the marketplace? And do you think we're now, as you say, recovering a little bit now from that Easter period?
The week before Easter, so the first sort of 4-day week with Good Friday was actually pretty strong. We saw more volume that week sold than in pre-COVID times on that Easter week, and the volumes, because of the less registrations in the market over the last 4 years, that's quite unusual for the sold volumes to be above pre-COVID times. They go up year by year, but not when you compare back to 2019. So that was actually quite strong. But it feels as though maybe dealers were stocking up a little bit in that period, and then they took their foot off the gas when they once Easter was out of the way. And similar on the retail side as well. Really, it was. I think the school holidays are kind of staggered for Easter, aren't they? Different parts of the country, and it felt as though they really sort of kicked into life after Easter, and that was when it kind of slowed down a little bit. It does tend to be that April and May are trickier months of the year, because you do get a bit of the holiday season kicking in, weather improving, and bank holidays. So yeah, but I mean, it was pleasing with regards to the volumes that we were seeing. Cars are still selling. They just maybe just peaked a little bit on the pricing of them, and there's a reluctance to overpay. Good clean cars still seem to be sought after, and there's a bit of a gap between those those cars needing a little bit more work. So that's maybe the ones that have struggled a little bit more, higher mileage as well. So, but yeah, generally Easter was kind of strong up until the Easter weekend, and then after that it dipped off a little bit.
And I mean, we always talk about, cap live versus the monthly figures, and we start off with the headline in terms of those monthly high level figures. But in terms of that live marketplace, did you see much? You're talking there about that acceleration towards that Easter holiday, and then that slowdown post Easter. Did you see much sort of? Was it a single directional trend as sort of post Easter started to slow down a little bit and then start to pick up towards the end of the month? What sort of activity are you seeing in that live when you're looking at the figures on a daily basis?
Yeah, so the way we work, we get, if a car sells on a Friday, we'll get that data over the weekend, and we'll be reviewing it on a Monday. So we're reviewing it sort of in real time. A car sells through an auction, or we get the feed sent through, and you could definitely see a softening off. We've seen the conversion rates drop as well over that sort of post-Easter period. And in live, there was a kind of a steady movement down. So we're obviously reviewing the very latest data, and going back a little bit and looking at it from the start of the month as well, and just seeing if you can spot a pattern in what's happening. And that's what the team of editors do. And yeah, we definitely saw a weakening off over that period of time. And then the last couple of days before we cut off, so we cut off Tuesday evening of this week, so that we can publish today, 3 working days before the end of the month. And maybe a little bit of stabilisation there, maybe a slight improvement. So although we published today, we're already valuing for those who have got live. So there will be some changes as you get into before you even start the new month, really, before some of the values are even published on the 1st of May in the auction catalogues. There could already be some movement, but it's not seismic. It's not huge movements that we're seeing down. But there was that sort of trend post Easter, and maybe a little bit of stabilising now, but it's probably too early to say on that one.
Well, fascinating insight as ever from Derren Martin there. And I mean, it's
going on.
yeah, there is so much going on. And one of the things that really stood out from our conversation with Derren is this sort of, dare I say it, a sort of return to normality, after the roller coaster ride that we've been on with trade values. But, the way trade values tracked in April was pretty much on a par with how it has over those pre-COVID years.
Yeah, you're right, and obviously giving a little bit of sort of stability outlook there, and in the full interview with Derren talking about where he expects it to sort of go in the month of May, as he sees that supply and demand balance a little bit better. But again, he does talk about obviously the weakness and challenges remaining in the EV sector. Oversupply coming through in the SUV sector, which has driven down diesel values a little bit more than maybe expected. But again, like you say, I think there's a bit of a sort of a nice comfort there that we have got a little bit of normality now in that sort of average movement of trade values. So yeah, great insight and great chat in that full interview there with Derren, which, as Curtis said right at the start of the show, is still on your podcast feed that we published on Friday of this week.
So turning to the headlines, we'll start this week with pretty much follow-up to the story that we started last week's show with. The headline is Pendragon new owner to cut hundreds of jobs in used car overhaul. So this is a report by the Financial Times that was picked up quite widely by the B2B press, and it looks at how the new owner of Pendragon is preparing to cut hundreds of jobs after, it says, the collapse of used cars following the pandemic. And what it's looking at in particular is, so Lithia is obviously the owner, it's looking at the CarStores business, which are these multi-brand car supermarkets that Pendragon opened back in 2018. I mean, it was very much led by, 2016. They were opened in 2016 and pretty much led by Trevor Finn, who was the CEO at the time. And I recall we did an interview with Trevor Finn for when I was on Motor Trader, and he actually announced this new concept of rolling out these multi-brand CarStores, but it was at a time when stock was in good supply. But what we're seeing now is Lithia running the rule over the business, and they're looking at those sites and they're talking about closing them and repurposing some of them.
Yeah, I mean, it is a real shame, because I think at the time when they announced the car store, it felt like that a good idea and a good move for Pendragon in the way they were shifting that, and an opportunity for them. I know the challenge they did hit a few challenges, you say, over the years there, but again, back to the point, that we've talked about with other supermarkets, you need supply. And you need a lot of supply to keep these businesses going. And I'm sure Lithia will be looking at their geographical footprint, where they've got operations already, where they've got used car centres already. What do they need? What do they need to service that territory, etc. So there'll be a lot of reviews of sort of footprint, scale, coverage that they need, and how they create sort of efficiencies across their business. And as a consequence of that, I mean, as you say there, it's a shame that these sites have been sort of cited to close, which does affect a lot of people. But as you said there, Curtis, they are looking at repurposing some of the sites. I suppose that'll be depending where there is, they haven't got a presence, and they may see where they'll put a franchise in there or leave it as a supermarket or something. But I suppose there is inevitable that something like this was potentially going to happen following the acquisition of the business.
Yeah, definitely. And there is talk of redundancies here, and it's kind of an inevitability of two businesses coming together, and there will be an overlap in certainly some of the backroom functions, but also if they're talking about closing 16 stores, there's a lot of staff there. So some unwelcome news there, but not a surprise really, I don't think, because the whole car store concept was very much of its time. And going back to that interview, Trevor Finn was talking about having a 40-strong network. Well, they never got up to that figure, but there are 16 stores that will be affected by this.
Yeah, and as you say there, the company is preparing to cut roughly 250 roles across the UK, or about 1 in 20 roles as a result of this move. The people added, and the Pendragon employed some 5,500 people in the UK. So they do describe it in the piece that the vast majority of the losses will come from the closing of, as you say there, the 16 car store sites, including 7 warehouse-sized showrooms that were intended to help drive down the cost of selling second-hand car models through economies of scale. So again, I'm sure we'll see a lot more of this play out as it becomes more apparent of what they're doing and when they're doing it, and obviously the results of it.
Yeah, and this does really follow on from what Inchcape did with their Bravo Auto used car supermarkets. They shut 8 sites fairly recently, and indeed Peter Vardy. We were talking to James Brearley, COO of Peter Vardy, just a couple of weeks ago, and they shut 2 Cars supermarkets in Scotland. So, we are seeing these franchise groups looking at their multi-brand used car businesses and scaling back now.
And remaining with Pendragon, we're moving over to AM Online, and the headline is that the sale of Pendragon dealerships brought £41 million profit for Pinewood. And this is obviously the Pendragon PLC sale of its Evans Allshaw and Stratstone dealerships and vehicle leasing business to Lithia. Netted a 40.7 million for the remainder of the business, which now continues obviously as Pinewood Technologies PLC. So yeah, I mean that's a nice little pot of money there for Pinewood, isn't it?
It is, yeah. What a great way to start this effectively new business. So the disposed businesses were sold for £378 million, and this has increased operating profit at the business to 105.8 million from 86.3 million last year, and profit before tax rose to 82 million from 50.2 million. Pinewood has really got off to a flying start, and there's some comments from Bill Berman, chief exec of Pinewood Technologies, this new business that's effectively reversed out of the Pendragon group and is now listed. And he says that Pinewood was bought by Pendragon in 1998, which actually surprised me because I thought it was a lot longer ago than that. Yeah. And under our ownership has steadily grown to become a profitable, high-margin business. And importantly, we have developed a product that is market-leading, not just in the UK, but globally. And I think globally is probably the key to their future success, because they are still closely aligned with Lithia in a deal which will open up more of the North American market, so America and Canada, to Pinewood Technologies.
Yeah, as you say there, I mean, that was the thing that was immediately obvious, that what Lithia would do with the technology side of that business and the partnership, because I think at the time we reported, didn't they have some non-execs on the board of Pinnacle or Pinewood from Lithia. So there is a partnership there, and as you say there, the plans to facilitate Pinewood's expansion in North America with a full rollout across Lithia's US dealerships is coming after the pilots that they're planning sort of early 2025. So again, that move into that US market through the Lithia businesses, and then how they then start to expand across that North America business. And they say that Pinewood estimates that the UK franchise dealership systems market is worth more than 100 million. They're sort of dominated by Keyloop and Pinewood. So again, really, focusing on their expansion opportunities across that US marketplace.
Yeah, and what I found particularly interesting in one of the comments that Bill Berman makes within this story is just how agile this new business is going to be, because he talks very much about the next phase will be approached similarly to if the company was a tech startup. They've got that agility, and with Pinewood's strategic partnerships with Lithia that we've talked about, work will focus on integrations with OEM systems and third-party apps. So they really are set for a very strong start.
And remaining with AM Online, and this is that perfect storm drove up car repair costs by 13.5% in 2023, and this is from a warranty firm WSG, which is Warranty Solutions Group, saying that the global part shortages and rocketing labour rates drove up average car warranty claims by 13.5% last year to £459. So yeah, I mean, this is some interesting stats coming out of these guys on what's been happening in the market. And we talk a lot, didn't we, on the podcast around the challenges around labour costs and parts and shortages through the pandemic period and the recovery of the pandemic period, but really having an impact on that costs part of warranties.
Yeah, and they break down, I mean, you talk about labour charges, they break down where this rise has come from. So labour charges increased by an average of 12% year on year between 2022 and 2023, predominantly due to the rise in utility prices, which affects obviously all dealerships, and motor trade insurance premiums. And in addition to that, parts prices rose on average by 8% during 2023 year on year. And the main factors for this were the conflict in Ukraine reducing availability, coupled with the additional duties on parts imported from Europe post-Brexit. We haven't mentioned post-Brexit for a little while, but I think we'll be returning to that theme
Feels that way.
later on in the pod. But that has actually resulted in a subsequent rise in driver salaries across the supply chain to combat driver shortages, which is a theme that we've touched on before, because a couple of weeks ago we were talking about how those cars are literally piling up in docks because there's a shortage of transport drivers, especially with some of the new brands coming into the UK and getting into that logistical network.
And there's some lovely top tens in the release that we can't go through for you, Curtis, but there is some great top tens because they do highlight some of the largest average car warranty claims, which is things like your short engine, an average claim paid of 4,223. A mains charger converter for an EV system, 2,665 there in the fourth highest claim there. Even EV again, down to the electric drive, which is in 10th position at 2,083. And they do break this down in terms of average claims paid by vehicle system. But there is largest car warranty claims, which is identified by make and model and the average age and mileage, and obviously the fault on that vehicle as well. So in 10th position there, Curtis, is the Ford Galaxy Z-Tech, and an average age of 2018, 78,000 miles, and a gearbox clutch pack at the cost of £4,786.
Yeah, but did you see what's at number one? A Mercedes C200 AMG, new engine. I mean, it was always going to be expensive, but £11,185. Ouch.
I was surprised though. I mean, in number 8, there was the Ferrari California.
Yes.
And average age of 2011. I don't know how many there is to get an average of the age of 2011 with 49,500 miles. Pretty mileage of that for a Ferrari California. Gearbox repair of 5,000. I thought that, in comparison to an engine for a Mercedes, was good value, don't you?
Yeah, but there is an asterisk alongside it. It says 5,000 was the maximum claim limit. So I suspect it costs a lot more than that.
So, yeah, I mean, it is some great data there come out from this. And I would urge you to have a look. I mean, just from an interest perspective, that have a look at the story there in AM Online. And I'm expecting we'll see a lot more of this kind of data coming out from these guys going forward. But, yeah, it's great to see this kind of data being exposed to the market.
Yeah, and good on AM for running those top 10s, because we do like a top 10 on the podcast. Well, we're back with the rest of the headlines after this week's Men-Able moment with our mental wealth guru, Stephen Whitton. And Stephen's talking about using language in the workplace.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men-Able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitton. Hey up, guys, it's Men-Able moments again. Don't know why I came over all northern then with the A up, but a little bit of an ode to you there, Phil, because this week it's all about using other people's language. And I've noticed that you do say A up occasionally, and maybe that's just with me. But anyway, the point is, recently, in fact last week, I did a fabulous session with the amazing team at Tracker. Led by Mark Rose. I said I'd give them a massive shout out. They really are awesome. If you get the chance to work with them, they're great. They're an amazing bunch of people. And the session that we were doing was based around DISC, the DISC behavioural profile analysis that I use. And that DISC stands for dominance, influence, steadiness and compliance, in case you're wondering. And what it looks at is the behaviours of each of those kind of types of personality traits. So we were delving deeply into that. And also looking at that whole thing around the type of language and the type of approach that each of those personality styles kind of prefer. Now, it's not a typology and it's not about putting people in a box. It's about understanding the different types of behaviours and language that people use. And one of the key phrases that we use in there is that old adage of treat people the way you want to be treated. Well, actually, it's even better than that, because understanding all that stuff is about treating people the way they want to be treated. Because if you only treat people the way you want to be treated, you run the risk of alienating 75% of the people, because there's 4 personality styles, right? So, yes, so a little bit tongue-in-cheek saying A up at the beginning, but it was for a purpose, just to get the point across about using the other person's language, the other person's behaviours, matching that, meeting them where they are, and all of that is done for the purpose of demonstrating understanding and bringing you closer together and creating collaboration. So, once again, massive shout out to Mark Rose and the team at Tracker for getting us in to do that great work, and I hope that we're going to do some more stuff with them soon. But if you want to hear a bit more about that, then as usual, stick around for a few minutes and I'll tell you how to get hold of me. So, equally on that front, our fantastic sponsors at Motors have been going out with a bit of a campaign in the last few days. Dealers deserve better. And I think you do. I think you really do. And I think you also deserve to gain and retain the best people for your business. And one of the ways that we're seeing that absolutely happen is where dealers that are working with us are embracing our Wellbeing Winners program and looking at that and using it as a method of creating an action plan for addressing all the things they need to do exactly that, to gain and retain great people. It's not about looking at what's wrong. It's not about having the drains up and criticising or being objectionable about what's happening in a business. It's not about that. It's about looking at what do we need to do as a business to have the right wellbeing strategy in place to make sure that we gain and retain great people. Now, increasingly, we're looking at that from the perspective of diversity and inclusion, from mental wealth, as you know, that's our core, but also something that's come up recently is the whole intergenerational methods of communication. And if you are like me and you're around any younger people at all, if you've got offspring, sons, daughters, whatever, and they're quite a bit younger than you, which probably they will be, won't they? What a stupid thing to say, but you know what I mean. Then you will have noticed that they probably communicate in a completely different way, especially if they're teenagers or one of the different labelled generations to say you or I. So have a think about that, because that's quite key as well, isn't it? And that really does link back to what I was saying about using the language that other people use. So I'm not advocating totally getting down with the youth and completely using all of their language and terminology, because that might make you look a bit awkward. But let's start getting to understand people a bit better and thinking about behaviours, language, and, as I said, all that other stuff that we need to do to gain and retain good people. Because, as we've already said, you dealers deserve better. So, as always, if you want to get hold of me, would love to talk to you about the Wellbeing Winners program. Just as a little reminder, we do have 4 free initial assessments each month to give away. So if you're not taking part, if you're not getting hold of us, giving us a ring and getting involved in that, then you're missing out. So give us a call and let's have a chat. You can catch me on stephen.whitton@menable.org, or menable.org is the website. Or you might have noticed that I'm on LinkedIn occasionally, and I'm on there as Stephen J. Whitton. So have another fantastic weekend. Good to see you, or speak to you, or hear you, or whatever, and we will catch up again soon. Take care. Bye.
That was a pretty good impersonation there, Phil.
Yeah. I'll take that one. I am a bit northern. Not that northern, but yeah. You're talking about whippets and flat caps next, if I'm not too careful.
Yeah, well, I did wonder where he was going.
It's one side of the border, really. There, yeah. I am Lancashire, not Yorkshire, but I suppose from south, it's just I'm a northerner. Whether it's which side of the Pennines that is, I'm still north, aren't I? So yeah, I'll take that one.
I don't know about the Pennines, more north, Watford Gap.
Well, yeah, I'm Pennines for me, as in Yorkshire, Lancashire, not necessarily north and south. But yeah, I'll take that one. But at least he kept away from whippets and flat caps and stuff like that. But I mean, he's yeah. He's right. I mean, he's talking about that language and conversing and things like that. And I mean, it is key into it. I mean, I think on one of his really early podcasts, Menables, we talked about automotive language, didn't we? And the way we use language within the automotive sector that, is not necessarily transferred well. But a great insight as always there from Stephen.
Yeah, and as Stephen says, you can find him online at menable.org, or you can email him at stephen.whitton@menable.org, and that's Stephen with a PH. And as he mentioned, he is on LinkedIn as well.
Definitely. So back to the headlines and returning to AM Online, and this is UK's car park nears 36 million, says the SMMT, after 2023 market growth. And we kind of referred to the production growth, didn't we, of last year, going up to 93.5 million globally in terms of cars and commercial vehicles. But this is specifically looking at the UK car park and saying that the number of cars registered on UK roads is 35.7 million by the end of 2023, and that the total comes after UK's strongest post-pandemic new car market last year. But there is sight for concern as well in terms of what's happening and how it's happening.
Yeah, definitely. So, as you say, very much on the back of last year's sales increase of, it was 18%. So, it was a strong market last year. But these figures are interesting, and it's worth checking out the AM story, because they do break it down by private and fleets. You can see the cut and how the market has grown. And the data confirms that, this was an interesting point made in the story, that franchise dealer networks could actually be missing a huge opportunity in aftersales because of their focus on young cars. And that's a point that's particularly relevant as EV sales ramp up and require perhaps less after sales. So, it is worth looking at this, because it does point out that almost 1 in 3 cars has been on the road for at least 12 years, which is, while it's testament to the production and engineering quality of sort of newer generation cars, it does highlight that opportunity to retain more of that after-sales business among older cars, certainly for franchise dealers.
Yeah, no, I think that's the thing now, is we've got this sort of increasing and aging vehicle park in the UK. There is that. Obviously, I mean, I'll have dealers screaming at the podcast this morning that over the years there's been a lot of work, particularly within the franchise dealer sector, to try and engage with those older mileage, those older vehicles that fall outside the manufacturer's warranty, and they try and get them back into the franchise network and away from some of those more specialist repair centres. And that's work done by the franchise network and in conjunction with a lot of the OEMs, where they, trying to get those, subsidies and approved schemes outside of that standard normal fall off at 3 years. So I think it's good that they're highlighting this, but again, showing where there is those opportunities in those older mileage vehicles. But the report from the SMMT that AM have pulled some of this data and insight from is very insightful in terms of giving a sort of a breakdown of the UK's motor park, because it does break down by powertrain through the various sectors, from your cars through to your coaches, and then does talk about obviously regional ownership as well. Looking at areas such as the northeast compared to Scotland and the northwest. We'll stick at the northwest there, Curtis, rather than whippets and flat caps again. Compared to down some of the other areas. So there's some very interesting insight in this report from the SMMT.
Yeah, and I agree totally, Phil. It's definitely worth heading over to the story because they've got some great graphics which split down the data, especially on the percentage of vehicles across different age bands. I mean, when it looks at cars less than 3-year-old, that accounts for 14.4%. But you look at cars older than 12 years old, and that's 31%. So it's showing the longevity of many of the older vehicles. And there was one particular stat that particularly interested me because I was actually asked this question during the week, and I didn't have an answer for it because I hadn't. This story hadn't been published when I was asked it. But it looks at the total number of EVs on UK roads. So overall, of all the cars registered for UK roads, 4.3% are plug-in cars, and that's split down by 2.7% for battery electric vehicles and 1.6% for plug-in hybrid electric vehicles. So an interesting stat there.
Yeah, and it does slightly worse for light commercial vehicles, saying that out of all the 5 million vans and light commercial vehicles on the road in the UK, 1.3% are plug-in, of which that is a makeup of 1.2% battery electric and 0.1% plug-in hybrid. So yeah, I mean, it highlights that concern. There's a lot of work to do still within that alternative fuel sector, whether it's full battery electric vehicles or plug-in hybrid electric. But remaining with the car production story, and we're heading over to Car Dealer. And this is that car production falls by more than a quarter as factories adjust for new models. And this is saying that car manufacturing fell by 27.1%, and this was last month, is according to the SMMT, and that the month's drop was the first decline since last August, and that the decline was expected as factories look to produce the next generation of cars. And that's electric vehicles comprising more than a third of the output, and that car production was up during the first quarter. So again, we had that car production in the UK up in the first quarter as highlighted there, but last month falling as a consequence of this shift from ICE vehicle to battery electric vehicles.
Yeah, some interesting figures here, Phil, and it's probably worth just highlighting that there's no great cause for concern here. The alarm bells aren't ringing because this was always going to happen. It was a matter of when, because a lot of the factories in the UK are repurposing for new generation electric vehicles, and as they phase out ICE production. So there was always going to be a drop, and we'll see how long this lasts, because obviously it does take a long time to transition from ICE to EV. But within the story, there's some interesting stats about where the cars go in terms of domestic or export. So volumes for the UK fell by 0.3% to just shy of 20,000 units, while production for exports was actually down 36% to just 39,500 units, but it still saw more than 6 in 10 cars made last month were actually shipped overseas. And it does actually say where they went. And this kind of goes back to our chat about Brexit, because the EU actually got the bulk of exports at 58%, followed by the US at 11.5%, China 6%, Australia 4%, and Japan 1.8%. So it just shows the balance and the mix of where vehicles are going domestically and overseas.
And remaining on that topic, a story that came out quite late in the week this week in the Telegraph, and this is from Carlos Tavares, who is the CEO of Stellantis there, and the cracking headline here that law to limit petrol car sales is terrible for the UK, warns Vauxhall maker, and says that warns that companies could slash numbers of vehicles it sells in Britain. Now, You and I think, have muted some of this on the podcast, and this is a consequence that he's highlighting of the ZEV mandate, that there's two ways to look at a percentage share. You either increase or decrease. And he's obviously saying that for the targets are too ambitious for both the this year and next year. And particularly, he's highlighted next year going up to 28% for cars next year, and that it risks manufacturers turning away from Britain as a supply market because of the challenges that proposes for the manufacturers.
Yeah, I would really like to see the full interview here, because there's some choice quotes from Carlos Tavares. He says that the ZEV mandate introduced in the UK is terrible for the UK and would force manufacturers to sell vehicles at a loss, and asked whether he would stop selling models in the UK. Bearing in mind, Stellantis covers all the old Peugeot Citroën group, Vauxhall, the Fiat brands. He actually replied, "I'm not going to sell cars at a loss." So he's making it very clear, but the implications are considerable because it affects so many brands. And he goes on to say that he's blaming the sagging demand for electric cars, which in his words were crashing in the world of reality due to high prices, poor charging infrastructure, and range anxiety among consumers, and that the natural market share of electric cars was currently just half of what car companies are required to sell under regulations brought into force this year under the ZEV mandate. So he's really highlighting the dilemma there that manufacturers have got.
Yeah, we'll keep an eye on this one. Let's see if they listen, Curtis?
Oh, yeah, I'm sure they're tuned in and listening and taking note.
And just finally, a little bit of an interesting little upbeat story to finish on today, and back over to AM Online, that research shows Tuesday is now peak day for enquiries, saying that dealers should ensure they have extra team members available to manage inquiries on Tuesday. And this is according to a new study from a lead management business, and this is iTrack Leads, and that it examined data from 400 dealerships to find that the number of inquiries was 47% higher on Tuesdays than on Fridays. Saturdays and Sundays proved to be the quietest days for inquiries throughout the week there. So I think, many years ago, it was always the weekend was the time for sale, and that kind of, slowed down. And we know dealerships now, a lot more dealerships are closed on Sundays to give time off to their staff members with the family, etc. But yeah, it's washed through now. It used to be kind of, Monday was a good day because people finish the weekend and then they go out looking for a car on the Monday. But Tuesday is it's interesting stats here from these.
Yeah, it is, and you're right, because their stats show that the trend has actually evolved over time, because Monday used to be the busiest day of the week for inquiries, and that they can actually pinpoint 2021 and 2022, and the shift to Tuesday began in 2023, and they say it's actually more pronounced this year. So I guess the message to dealers listening to today's pod is just make sure you've got your best staff in the showroom on Tuesdays.
Yeah, so hopefully that's a nice little upbeat story just to finish all the headlines there. But as you said there, busy week of headlines. Do catch up with the full interview there with Derren Martin, just right at the start. That's in your podcast feed there. And again, wish everybody the best at the AM Awards and the Driving Digital event pre-awards next week.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, Just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.